Hello there, my name is Daniel Kim, and I'll be presenting a PowerPoint that takes on different aspects of accounting from Chapter 1 to 6.1. In the first slide, we are presented with an accounting cycle. There are 8 steps in an accounting cycle. The first step is a source document. This is where all the business transactions are recorded on. For example, purchase order, sales order, etc. The next step, journals, also known as journal entries, is where the transactions are recorded in a journal as debit or credit. The third step, ledgers, is where the journal entries are transferred onto T accounts in the ledger. The trial balance is used to verify that the sum and debits are balanced. The next step involves adjusting the entries in order to calculate a more recent trial balance, which is in the next step. The closing entries are journal entries used to transfer balances into a more recent account. And finally, in the last step, a financial statement is created to show the expenses and revenues of all the transactions that were recorded in the source document and onwards. In the second slide, we are presented with a balance sheet. The main purpose of a balance sheet is to show the financial position of a business at any given time. There are 2 main components of a balance sheet. They are the assets and liabilities. In accounting terms, an asset is something that holds an economic value that can serve many different purposes. For example, if I purchase a chair, it is considered as an asset, as it holds monetary value and can be sold. A liability is something that is owed to by a business, and an example could be loans, mortgages, etc. In the third slide, we are presented with a GAAP, Revenue Recognition Convention. This particular rule is a generally accepted accounting principle in the accounting world. It states that revenue must be recorded in the accounts when the transactions are completed or made. These are the following transactions for Mr. Lee's accounting service. On January 4, 2011, Mr. Lee pays tax service to Ms. Cho Yu $200 on account. And on January 5th, Mr. Lee receives a Hong Kong electric bill $100 to be paid by January 20th. And on January 8th, Mr. Lee collects $200 from Mr. Cho Yu to pay her amount owing. And on January 18th, Mr. Lee pays amount owing to Hong Kong Electric. These are the following transactions in a more organized manner. In the next slide, we are given a chart, but we have to create a situation for each transaction. So for the first transaction, Mr. Lee performs a service for $200, but Kevin pays $50 first. In the second transaction, Mr. Lee pays $200 on account to Hong Kong Waters. In the third transaction, Mr. Lee earns $300 but doesn't deposit into bank. And in the fourth transaction, the fees earned in the previous transaction is then deposited into the bank. In this particular chart, there are numerous things that are wrong. First of all, the second transaction is missing the date. And also, the first transaction, revenue and bank, should be flipped around. The bank should be then debited while revenue should be credited. Also in transaction 2, it should be accounts receivable and not accounts payable. This type of chart is a chart of accounts. It is a general list of all the ledger accounts and is used as a reference tool for deciding which account to use for a transaction. The numbers on the left represent the account number for each individual account. The column next to the number is the account's description. This particular chart divides the accounts into 3 sections: assets, liabilities, and owner's equity. For the next slide, we have to create a financial statement for Mr. Lee's accounting from the date March 30th to 2011. As you can see in this following financial statement, the date and the title is presented in a well-organized manner and shows the total assets, total liabilities, and the total liabilities and owner's equity. All the numbers are presented in the same column. Thank you very much for listening to my presentation.